DHVN 5, DHVN 3, 2, 1. DHVN event has occurred. DHVN, 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 DHVN.
Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube? Thanks, Marty and Lucky. Thank you. How we doing in YouTube? And good morning, everybody. Thanks, Stephen. Okay, well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The stream is also about the Bookmap Discord Trader Lab community. It is a community of like-minded traders who come together to leverage their collective experience, and I'll share a little bit of that with you today. And it's also about the business of trading, understanding how the market works, why it does what it does, and how you might get in alignment using structured trades that you can reverse engineer and vet and determine if you can actually extract a statistical edge. This business, and I always start this way, is really a gaming process or a probability-based business. It's not a predictive business. We cannot control what the other participants do, when they do it, how they do it, or anything else. And there's all the inputs that come into the market can be immediate and random. So we cannot respond to fundamental inputs. It's more about the market digests fundamental inputs and auctions to get the consensus of what those fundamentals might mean. So that might be an economic report or an external event that nobody sees coming. So in that sense, we cannot predict what will happen. What we can do is just like the casinos do. They can't predict the cards coming out of the deck or how gamblers play the cards, but they only play games that have a statistical edge. And they've done really well using that business model, even though they have no control over the individual interaction with the other participants. They do control how they play, if you will. So while we're not playing a game, the casino business or gaming business has a proven model. The goal in a trader lab is to overlay trading into a proven business model and then approach it with understanding that we can't predict the outcome, but we can, if we have a vetted, structured trade plan, hopefully discipline ourselves. Thanks again for visiting a Trader Lab. Let's take care of business. We got a lot to talk about today. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get there, we'll talk. 1 second. Okay. Making some adjustments here. Okay, let's go. Now, statistically, I think I'm going to not go over the statistics. They are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars and 60 PDFs of structured trades. This is something you can download. There's no cost. If you're visiting in YouTube, there is a link down there. If you want to visit Trader Lab, access the community and the resources. And let's now move on. Next piece. This is now the Trader Lab is a very active community of like-minded traders. Our senior trader has over 50 years. I've got 45, and we have the full range of traders from newer developing traders. And by the way, we're all developing traders. Why? The business is constantly changing and evolving, and even moment to moment, it's changing and evolving. So we're always looking to get better. It's no different than being on a competitive sports team or being a high performer in any field or endeavor. You're not never quite there. You're always working on your craft. So I posted this 7 a.m. Saturday morning, November 2nd. Now, and here's what I want to talk to you about: the condition of the market. Now, let me do it this way. We need to look at the ES, and this is primarily ES focused as a learning model for developing traders. We need to look at the ES Thursdays and Fridays RTH. I'll then be showing you a chart. Notwithstanding Monday's ETH, which is our most recent auction besides what's happening right now, the current behavior leans to continuation lower. The elephant in the room is the failure to take out Thursday's high a day. Otherwise, unless we do that on Monday, it appears to have been a short squeeze. Also, we tested inside the consolidation. We fell out of a 5,800. You'll see this on the chart. We have not tested Thursday's low a day, but I would anticipate that and have a scenario for it. We have a neutral or inside day on Friday. This is not unusual after Thursday's failure. Draw out what you think the first move might be. We can gap lower or open lower, retrace, squeeze early shorts and squeeze Friday shorts, and then continue lower. We can gap higher, squeeze Friday shorts, and then go lower. We can also stay inside the range after testing below and consolidate because of the election on Tuesday. There are a few other scenarios. Draw them out, put in key levels, and based on the opening type, be aware of stats to guide you. But remember, context is number one. Unless we gap out a range and not squeeze, you should be conscious of all the scenarios. A good example is Friday's open. We opened, pushed lower, then reversed and squeezed the early shorts out. And Thursday shorts. Market goes down to go up and up to go down. We went up on Friday and failed. Market has gone up to potentially go down. Monday's ETH and the first move in RTH should be prepared for. Draw the diagrams out and put them in. Anyway, you have to anticipate, and there's a lot more. This is all in here. Friday's stream, consider Friday's trade, interpret. Did you get short on Friday? Did you get trapped? The opening trade, when we have an opening trade, we have minimal information, so I talk about that. There's a lot here. Anyway, this is what I do every day. I create a trade plan for myself, and we discuss trade plans and opening scenarios in the Trader Lab. Also, how do you create a plan? I'm not going to spend much more time, but this is what's going on in Trader Lab, okay? I've always said I believe almost anyone can learn to trade, assuming they do the work. Most will not do the work. They'll fall into the trap of searching for easy and FOMO. There's no easy in a business with potentially unlimited upside income potential. So how can there be any easier shortcuts? Anyway, there's much more, and this is Trader Lab. Now look at what we have going on here. I have to show you this so you understand what Trader Lab represents. It is special. They sell, here, traders are sharing charts, code. It's not amateur hour. There's a lot in here. Anyway, let me try to get back to the present. So if you're visiting in YouTube, you're all invited to Trader Lab. Open invitation. There is no cost, but you do need to use the link in the bottom of YouTube. Where is it? Okay, here we go. And go from there. And there is no cost, but you do have to confirm your Discord username so we know you're not a bot. Isn't that something? A bot. So, RTH open. Oh, I was going to show you one other thing here. Whoop, very important. Now, let's talk about this. This is the volume profile, and we'll get into that. But these are RTH candles. Now, here's what's important. From October 9th, when we broke out of the previous consolidation, here we have a trend day up, and then we started a new consolidation, October 9th to the all-time high. And then we were inside of this thing. Well, roughly 5,800, or actually right here, was the breakout of this consolidation. That happened last week. So that was Thursday. And the low of this consolidation is around 33-ish. And if you guys remember, we had a target of 33 on the breakout. Now, when I say we had a target, it's just a number. It's a level. It's created by the auction, participant behavior. Levels are not walls. They're areas of behavior. If the market has momentum, the wall doesn't mean much until that momentum. So if there's sell stops at certain levels, you know the market's going to go until those orders are filled and we run out of momentum. So anyway, it went right to the number, hit it on the head, luck. But it was a target coming down here. Now, here's the other piece to this. We gapped higher inside of range on Friday. We got the early selling, and that trapped these shorts from here, and the existing shorts in this leg have buy stops. So you get the first move down, and this is in Friday's webinar. You can access, I think you can still access it. It's specifically for Trader Lab participants. Remember, the first move was down, and then the squeeze. Now, here's what's important. 5,800 is resistance. And you had Thursday's high. We came all the way up, squeezed these guys out, so the early sellers and these shorts, but didn't take out Thursday's high. That's what I call canary in the mine. Because why does the market go up? The market goes up when it gets out of balance, in the sense of, if you've got sellers down here and buy stops above it, and of course buy stops above this high, and the market opens lower, what do you get? Buy stops above the first opening swing, and then you have the shorts in here with their buy stops. That creates this. And then you get new buyers. Now, look what happens after you get the buyers. What does the market do? It creates something in the profile world we call a neutral day. That means we take out the first hour's high, we take out the first hour's low, and look where we close. So, down, take out the shorts, get new shorts, fail to take out the high, come back here. So now that suggests lower. So what do we do today? We open, we go lower. See if this isn't familiar. What happens to these shorts? We squeeze them, and then we go higher. What might that suggest? U.S. election tomorrow, so don't forget. That means what's happening? No uncertainty. So the market may or may not take out this low. It's also possible, about a 30% probability, that we either go neutral today or not take out the current low of the day and rotate, because the market's waiting for news, new input, which is a biggie, which is the election. So our plan for today, my plan at least, was down first, not thinking that, and if we get under 33, then the Acapulco cliff dive. If not, trap the early sellers, which we did, rotate out, squeeze them, and then potentially stay in a range and close in the middle. And that's, I don't predict. I'm just saying all these are scenarios around 60 or 62. So currently the market is taking out its low, and let's see what it's doing. So we can take out 33, and this is the current low. And I'm sorry, it isn't. Yesterday's low. So the goal today was early trade, take out yesterday's low, take out the ETH low, and then 33 is the key level. And if we come down here and we cannot get down under 33, then to squeeze and come back towards this. And we have another level up here, but this is the primary one, around 72, 73. No clue. Remember, no precision. So now let's get into the RTH Open. And if you have questions, please post them, and I'll do my best. Also, if you're in YouTube, thank you for visiting the Trader Lab. RTH Open. Any questions, by the way, before I continue? Please give a thumb up, a like if you're visiting in YouTube. Oh, congratulations, Russ. A second funded account. Good for you. Okay, let's go. No questions. All right, this is called the RTH Open. Now, this is the ETH overnight volume point of control. Volume point of control is the highest price. And, trading is like a shopping experience. I always say that because if you know how to shop, you might know how to trade, or at least think about what the purpose is. The purpose of the auction is to figure out what's too high, what's too low. The other part of it is traders that are on the wrong side of the trade take the opposite position. So if you are short, you can become a buyer, buy stop, right? So there's always traders on both sides of all these rotations and fractals, but the purpose of the market is to try to figure out what's too high, what's too low. So RTH Open is here. I don't know why I'm not seeing it. It must be covered up. It must be here. Yeah, it is actually. It's under what says VWAP. So I'm looking for shorts. So I'm looking for the short trade, but I have to be aware that I can go up first to go down, right? Scenarios. My other scenario is if I go up and I find sellers, I'm going to get short. And now I have statistics. And again, these are available in the Trader Lab to take out yesterday's low, but not take out the 33. And then the squeeze. So open, come down, take out the 33, which is my next target, and accelerate, or come down, not take out the 33, and stay inside. So those are my scenarios. So let's look. So the market opens. Now I'm going to take you into more structure, into microstructure. This is called the developing volume point of control. It's a profile term, and all it does is measures the distribution of volume. The yellow line tells us where the high volume is at the moment. And as for the full RTH session, now since this is the RTH Open, not so much on the volume, right? But as the market auctions, so too low, and now there's more volume here, this shifts higher. This is the shopping experience. This might be too low. So I'm going to label it. I call them variable high volume nodes because that's what this is, high volume. So the volume point of control moves around as the volume moves with it. And if you get price and volume together, think of it like your shopping experience in the store. Price and volume equals retail, or I'm willing to pay this. And the sellers are willing to sell it at that price. So everybody's happy. But what happens if we move away from this price at the moment? And this is language. It's saying this is too low. Now we have more volume here. So the shoppers, the buyers and the sellers are willing to do business at this price. So that price is too low. This is now the retail price. And in the profile, it looks like, let me just get this on here. And this is called an auction because instead of the store where the prices don't move too much, this is happening in real time in all fractals or time frames as you think of time. Time is not an element for me only because it's this. This tells me what's happening. If it takes 10 minutes, fine. If it takes 4 seconds, fine. Time is not the part. It's the interaction, and then the buyers and the sellers, like as an example, there's buyers here, there's sellers here. It's a consolidation. And we're going to either reject the price and move elsewhere, or hang out and oscillate around it. Let's see what it does. This might be too low. So let's watch. Price is moving higher. What is that telling us? Too low? Something is not quite right here. You know what? I think my clock did not reset properly. Oh, wait. No, that's okay. Sorry, guys. Getting a little confused. Daylight savings time, So this is full session over here. This is only showing us what's on the chart, which is everything. even though we just started here. So if I scroll out, you'll see how this moves. Okay. So, and this is for the day, starting at RTH open, just in case you're wondering. So as this is going higher, this is saying too low, too low. So we're moving higher. And what I'm reading, and this is the language, I don't use indicators, so I just read the language. These are all too low. So think of them kind of like support. And this pricing is too low. So that's why we're moving higher. We're taking out our 33. There we go. Here we find too high. In this 61.62, now try to follow with me, is a intermediate high volume location. The market works in fractals or multiple time frames. And where's this 62 coming from? It's right here. So remember, Thursday, Friday, too high, looking for it to break down here. 62 is the highest volume in this day, these 2 days. We came back to it. We are checking it right now in my, as not at the moment, but in the narration. If it's too high, I can go down. So remember, I went up first here, and now I'm looking to go down and then maybe come back up. So we don't know what it does. Remember, part of the joy of trading is randomness, just like the casinos. So we come up here, first move up, we test this. Now I'm looking at it, and if this is too high, this sets up a potential short for yesterday's low and the overnight low. So I'm looking for a short. And that was my plan. So let's look. So this is too low, too high, too high, too high. In other words, everything is too low, I should say. When I break here and I come back here, this sets up a short. So this is the first short. Now there's more. Let's assume you did not take a short. You break here. Now here's the mid and the VWAP. You come back here. You test this too high. It is a short in the Trader Lab. So these are Trader Lab structured shorts. Why? You're asking. How do you know? The right answer is we don't know the outcome. But if you have a structured trade and you can read the language of the market, not waiting on an indicator, which might be saying up, now down, or what are we doing here? Well, I don't know. But for me, because I have a level, and this is the retail price in the last 2 days, in other words, highest volume, I'm trading top down, bottom up. So in the microstructure developing time frame, it's up. In the intermediate time frame, this is the fair price. If this is unfair, 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 unfair in the developing time frame, and this is the fair price in the intermediate time frame, think of this fractally in the sense like Russian dolls. If this is the big Russian doll, these are the little Russian dolls inside, and I test the big Russian doll and it's too high, then if I break below the developing fractal or Russian doll and I come back and I can't get above here now, oh, I'm not paying that, too high. Let's look at the language. I come back. You're kidding. It's still too much. I'm not paying that. And when we tested this next fractal higher, too high, what do? In Trader Lab, get short. This is a short in the Trader Lab. Now, we have to clear what was too low. Here, look to the right. What do we see? Break low. What was too low becomes too high. Support resistance. Different way to look at it. Break low. Where do I come back and test? What was too low becomes too high. This is another short. This is an ad, or you're just a tourist. Then where are we going? Yesterday's low. Where is yesterday's low? I think it was here, 52. And then the overnight low, ETH low, here. So this is our target. Okay? So this trade is a structured trade in Trader Lab to here. Now, subject to the number of contracts you run, and this is based on a minimum 2-lot configuration. This is for developing traders. Obviously, we have traders at all levels in Trader Lab, but I only discuss developing traders here in the stream. if you're trading more contracts, which many do, for me, well, I'm going to say my next target was this, and this 33 was my target, and then I'll give you the next target here. 5,700 and 5,690 are my next targets. These are not trade recommendations. So that set up the short, first short. Now, any questions on the short? How we doing there in YouTube? You guys have questions? Please give a like if you're getting something out of this, or the thumb up. So now this is resistance. So if we come across here, it becomes significant. Let me show it to you. I think I got ahead of myself here. Where are we? Yeah, 824, 830. Hold on. Right, this. What I did here is the market came back, and we have a structured trade in the Trader Lab called VWAP to VPOC, and then we're looking for it to come out the bottom, assuming the trend is down. And in my mind, it was shorts today. I had no longs, just shorts. However, so I have another trade here, and this is a structured trade. Now, whether or not someone takes this trade is not up to me. What I do and somebody else does, I mean, there's traders who got long in Trader Lab. You know, sometimes I think I'd like to be taking their trades instead of my trades, but that's the part of trade plan and just doing your thing. So there's not one way to trade. It's very important you understand there's not even a right way to trade. It is really metrics driven over a large sample size. So for me, I took a short here, an add, I should say. So I'm holding runners and I add here to come here and then come out the bottom. And that didn't work. So I got taken out of all my full position right here. So that was that. And I was kind of, I think the word is annoyed. It's just one trade, you know, but I thought I had a nice position going, especially because I was looking for it to take out the Thursday's low, or not, or stay inside prior to the election, one or the other. So anyway, now I get, so this now becomes too low. The tip off for me for this, when I took this trade, I put it on and I saw the selling here. So this is all good. Right here is a structured trade right here. So all this is okay for this. When I get this, I start hearing the volume here is starting to shift. I know there's trouble in River City. This is resistance up here. Let's look where we go. We come back to this location, and this is the high volume area, but we're above all of this. So that takes me off the shorts, and I'm not taking any longs. So I saw this, and I'm thinking, well, there's a couple things here. I can come back here, but I know there's stops up here, and this is called mean reversion. I can also take a long here and come back here. I had no part of that. I have a high probability statistic coming here, retail price in the ETH, and the 62 is still important. And I have this, 72, 73, a low volume node in a higher time frame. And the way you might want to think about this, let's step up to a higher time frame a moment. This is the high volume or retail price in the intermediate time frame. This is an outside edge. Think of it this way, high volume, and then as the market moves, if there's less buyers in a location, you'll have less volume. Even though there's somebody willing to pay up here, there'll be less of them. Most of them, the interaction is here, and down at the outside edge was down here. This was Thursday's target, if you guys remember. So that's kind of the rotation in the intermediate time frame. And just to take you back to see that, just so you could see where this is, actually, this is the outside at 33, and this is the high volume here right here, which is a lot. That's 72-ish, and that's aligned with the current high of the day. Let me just come back to that right there. Okay, so you see where the higher time frame or intermediate time frame levels are from. So I was working from this down. Once we come across here, I'm working from this back to here, down to there, or not, or just stay inside. That's the trade plan. And the thing that the joy of trading is randomness. And that's how the casinos work, randomness. So once I'm above the 62, now I have no longs for me. Now you could have got long, but I'm considering this two-sided trade, and my priority is to stay in alignment based on what happened on Friday. The shorts got taken out, so my next level is this. And this is where I think we got, right? This is the current high of the day. So that was in alignment. So I'm looking at this, and right here I'm reading a short, and but I'm conflicted here. So I read the short. I don't take the short. I'm just telling you, I don't take the short. I'm going to show you microstructure now. Now let's look what happened here. Now I'm going to take you down in time frame as you think of it, and I'm going to start talking about order flow and structure. Now before I do this, and I go into show you shorts and how you would get on a short and why, are there questions? Please post them. How we doing in Discord? Any questions, or are we doing okay? And YouTube, please give a thumb up and a like if you're finding this interesting. And you're all invited to Trader Lab. Don't forget. Now the market's going up, and this is an outside edge. No precision. Remember, these are levels created by participant behavior. No indicator. I don't need an indicator. In fact, I don't even want an indicator, because what is my indicator telling me? The market's going up. I should only get long, probably. But the auction is telling me I should only be getting short, or using it. And when I say me, because of my time frame, other traders can do anything in any time frame or fractal. This is the beauty of trading. Once you understand how the market works, you can then isolate the conditions and the range that you want to operate in. So right here, now I don't know anything here. I'm, this, and no clue. I mean, right? No clue. We could just as well take out the ETH high and come up here. All this is possible. So I have no idea. So I'm like you in some ways, that I have to see behavior. And then once I see the behavior, I can then draw some conclusions from it. Up here, I mean, the market's going up, and I don't know, right? Except I have a level. So when I get near a level, I just start looking closer. That's all. And I cannot predict anything. So the word prediction is not in my trading vocabulary. It's what most retail traders do. So I don't do what they do, because I've already done that in my early development. Because who knows, right? Everybody tries everything they can. But I started at some point looking at what everybody else does and what I did, and decided if they're not succeeding, why would I expect a different outcome? The problem that stops us from, I think, changing our behavior is that we have random success. I mean, I always think of it this way. If you didn't have a chart or anything, just the buy and a sell button, you'd still have winning trades. What does that tell you about randomness? So right here, buyers, I see a seller, I see a buyer here, and I break. Notice the change in behavior. Seller. So right here, this is the change. This is a consolidation, this volume. When I break out of here, I'm going to draw a little box around it. This is actually a consolidation. And a consolidation is not complicated. It's just buyers and sellers, and somebody lost. So when you look at this, you can see outside edge, and the high volume in here is this. Consider this a down the street little mart. Like here we have 7-Elevens, they call them, and whatever. your little down the street store is. There's not a lot of buyers, but there is shopping, and they sell S&Ps down there. We don't have a lot going on here, but this is the retail price, and the shoppers left the store. Just think of it. I'm only using analogies so you can, when you look at this, you'll go, what's going on? They left the store. Now, this is the outside edge where the buyers were. Right down here was where we had the passive buyers, and up here you have passive sellers. So sellers, buyers, that's what creates chop. When you break away, it means these guys are now having a problem. That's the buyers. The sellers are in control up here. Now we see the aggressors, which are the sellers. That's the red bubble, delta. I see a buyer here. They get run over. That was this iceberg. So now I rotate. So where are the sellers? Well, I know we have sellers there. Buyers were here. Think Pac-Man. They got eaten up. Sellers. Now I rotate. Buyers are here. And I come up. Sellers are now here. Sellers are under these buyers right here. This is how I interpret order flow. Low volume node is here. This is like a separation between distributions. I now have a new distribution forming. Here's the high volume. It's right there. So now we're shopping here. Buyers are here. Sellers are here. Aggressors are here. If I can't get above there and there, I'm going south of the border. Selling again. Watch the test of the volume. Too high. What do I know? Too high, break low. Microstructure, break low. Trader Lab structured short. Let's watch it. Where to? We're trying to come here. Mean reversion. Watch. Here's my resistance. Test. All these are shorts. This is a target. This is called mean reversion. Now, two things can happen here. We can bounce, which we did, come here, come through, go down, or continue higher. Who knows? What do we know? Too high. All these are shorts in the Trader Lab, subject to your trade plan. So for me, no longs. For me, and this is all posted in Trader Lab, and of course, it's up to each individual trader. Where are we trying to go? 33. Remember? Was it going to do it today? No clue. What's our target below? 5,700, maybe lower, 5,690, not a recommendation. We can also come back inside 62. That's the trade. That's all there's been. Does that work for you? Is this something that would work for you? Now, let's talk about something a little different. But before I do, I'm going to come up for IR and see if you have questions. This is trading in fractals. This is understanding market mechanics, how it works, why it might do something. The other part of trading is the randomness of it. No way to predict. We are operating in a completely random, uncertain, psychologically challenging environment. How do you get control of yourself? We can't control the market. Casinos can't control the cards. So where do you get control? It's got to be of you. How do you develop control? That's a trade plan. How do you know when to interact? That's statistics and vetted structured trades that are part of a plan. Where can you learn that? Well, the Trader Lab, and any trader that's worth their salt is not playing a video game, but is using a strategic approach based on probabilities and market mechanics and behaviors. And if you're in Trader Lab, your job is to understand how the market works. It is not your indicators. It has nothing to do with your indicators. It has to do with you understanding how the market works. If you don't understand how the market works without indicators, then you really are missing a primary piece of education. If you don't understand the condition of the market and how the market works, how can you use an indicator? Most of us, and I say us because been there, done that, most of us use indicators as a proxy for actually understanding market mechanics and how it works. Let's look at our targets down here because we do have to be conscious. Going for this and maybe lower. So these are our targets, okay? And as I mentioned, and I showed you guys at the top of the stream, all of this was in the Trader Lab. I posted all of this in the Trader Lab on Saturday. I'll answer that in a bit. And if you want to review this stream, you need to come to Trader Lab. Oh, let me find it. Because this is what's important. Nobody can predict anything. And I'm not showing you this because it happened to work out today. There are many days nothing works out, okay? It's the real world. If you're interested in the real world, but I'm trying to get back here. Look at the Trader Lab, how active there it is. It's an amazing community. Amazing. And there's no cost for this. So I'm talking about scenarios. It helps us react faster with timely participation, and ambiguity. Ambiguity might be most conflicted. If you have a scenario, you already know. Okay, let's find it. Talk about trade plans. If you don't prepare, you're just a gambler. What about the opening trade? All right, here it is. We need to look at the ES from Thursday and Friday, notwithstanding Monday. The current behavior leans to continuation lower. The elephant in the room is the failure to take out Thursday's high. Otherwise, unless we do that on Monday, it appears to have been a short squeeze. Also, we tested inside the consolidation. We fell out of a 5,800. I showed you all this. We have not tested Thursday's low a day, but I would anticipate that, and we have a scenario for it. Okay? This is on Saturday morning, 7 a.m. This is what Trader Lab is about, and this is what having a trade plan is about. And if you don't have one, you're really not acting or understanding what it takes to be successful in this business. You are just playing a video game. And I'm going to say video games are great, but you might do better going to a casino, I think, getting the cocktails and the ticket to the buffet. Tom B., when do you consider all those sellers the fuel for the old micro 78-ish that was a flat top and considered to be a magnet? For lot Tony, it's a good question. Why wouldn't we go up and get all the shorts? Because we almost got to Thursday's high on the squeeze, and we didn't make it. This was Thursday's high. Friday was the short squeeze, and we failed. We also closed lower outside of the consolidation that we broke out of. This whole consolidation was a failure. And this was the test on Friday, failed again, closed lower, saying too high, too high. That's why no long for me, just trying to get short. So I never thought about a long, though I can see longs. To me, the longs are just the early shorts getting squeezed. What happened on Friday? Early shorts. They got squeezed. What happened today? Early shorts. They got squeezed, which sets up the real short. And this is a scenario I talk about over and over again. And this is for everybody, not just you, Tony. The market goes up to go down, and the market goes down to go up. Does that make sense? Hi, Yuri. Yuri, how are you? Yuri, do you happen to be, well, no, you're not the same Yuri I know. Um, by the way, guys, we might make this stream public. I don't know. You guys vote on it. Otherwise, it's going to be exclusively for Trader Lab, like most of them are. But there is a library of webinars. If you guys in YouTube are finding this interesting and maybe different, I think what I do is quite different. And I've been doing this almost 45 years, not this specifically, but I learned market profile around 1985, 6, somewhere in there. Learned it from the Peter Staubmeyer who created it, and then thought I'd get smart. And I had a lot of indicators in system design, system development. I was a fund manager, money manager, you might say. So so I was systematized, and that's indicators, if you will, optimization on steroids. So I had a very hard time letting go of what I believed was the right thing to do. You spend years doing something, you kind of get stuck on it, you know. So it was very difficult for me to, the old thinking, I got something out of it. No, what I got out of it, it was a lot of years of wasted time because I didn't understand the market because I was exposed to classical bar charting early on, which is all measured moves. So and that was at the CME. So I was a believer in prediction because that's what I was taught. And there were no off-floor traders when I started. All my buddies were floor traders. So I was really in a different world. There were no computers, no internet, dumb terminals. They were pretty dumb, was as close as you got. Quote machines and drawing charts by hand. We get a chart book once a week on a Monday, and then it was open, high, low, close. There were no candles. So I'm just saying there was no real-time volume. It was just a different world, right? So all I'm saying is I came from that. And because there was no information, change was very slow. I mean, my first computer was an Apple IIe, high tech, very exciting. And I know I've mentioned this many times, but since I know there's new visitors here, I shared an office with George Lane, and he created stochastics, so oscillators. So I got into oscillators. I thought the Holy Grail showed up. Look at that, the line crossed. Never seen anything like that before. And oscillators are only derivative moving averages, but it was magic. So when I was built trading systems, it was really predicated on trend following. So I would trade trending markets, and there was no day trading. Short term for me was 2 to 3 days in the large S&Ps. Now you have to also understand when I was trading the large S&Ps, we had a 30-point move in the Dow. You'd call up your buddies and talk about it. So we were trading the larger instruments. This is before E-mini and all that, before Globex even, And then Globex, we started with Project A, which was bonds, so all the way back. So anyway, just a little bit about me. So I have a few tire marks on the back. You've always, Tony, you're saying you've always heard you buy into strength and sell into weakness. No, that's upside down. You want to sell to strength because it's the outside edge. So what you want, like for example, the market, what did we do? We took out our target. Now the market is short. Why might we counter rotate? There's a leg of shorts. And now let's talk order flow. How do you manage a trade? Have you ever thought about that? How do you know where the low of the day is? First of all, we don't know that. So here's a couple of things. I'm going to talk to you about structured trades, and these are not trade recommendations. I can tell you if you're in Trader Lab, you know where your next trade is. Here. Outside edge. This is called the IB low, initial balance low. And we have something called the IB continuation trade. It is a mean reversion trade. If we come out here, and this is our resistance here, it's created by this structure. I'm going to put a couple lines in here because we're going to set up for another potential trade. Not a trade recommendation. I have to pay attention here, but I'm looking at questions, I'm multitasking. And if you guys know me, which I've been doing this for a number of years, you also know that I don't multitask well, and I don't think streaming, looking at the market, looking at questions leads to good outcomes. So I don't initiate trades while I'm streaming. I've done it in the past, and it hasn't been pleasant. So I can narrate, but I also cannot. When I'm looking to put a trade on, I got to be 150% kind of in alignment mentally. In other words, I'm with it. I'm with the market. I'm feeling it, experiencing it, reading it. I don't use indicators, so what I'm doing is I'm reading the order flow, and I can read. It's not complicated. It's just like everything else in this business. It's random. So I can only tell what happened when I see after the fact. So let's look what happened here. Now you know how the market works. It gets directional, and then it pauses. A pause is a auction in microstructure. Think Russian dolls, micro. So this is a consolidation, and you can see it here. Too low, buyers are here. Too high, sellers are there. Retail, high volume. Think of the little store down the street. So I'm going to draw a little box around this thing because it's a consolidation. Very simple concept. And you see how the consolidation brackets where the change was. So the sellers are here. This is the order flow. And you're going to ask me how I know, because we didn't get above it. And the buyers are here. The buyers are there and the buyers are here. So I see my buyers here. I see a seller here. The buyers are here, but the buyers are here. I come up and I see a seller here. I see a seller here. So I know there's buyers and sellers, and I cannot tell which side's going to resolve. I break low, too high. So now here it is again. Chop, chop, chop. Break low, too high. I wanted to show you the cover, but we're coming to the trade here. So this is not a trade recommendation. I'm going to come back to that later. Now, this is a location. Now, the outside, if I can, we're coming to the IBF, and we're going to watch this. I'm having a hard time here with this. We want to watch this area. We are through it, so I don't have a trade here, but we got to watch it now. Let's watch it together. This is our area. This is our high volume. We got to get below this to break down to come here. So we're going to watch this. Sellers are here. We got buyers here. If we extend out of here, then the potential is for a short here and south. If not, then there's no trade here. This is a structured trade, but like every trade, it's not mechanical. And the fact that we're here is very important. So we're going to watch this. Not a trade recommendation, guys. I don't call trades. And besides, why take my stop? You know, I take them all day. So this is our area. Sellers are here. Buyers are there. We're now below. This sets up right here. Let's just watch it now. For this to go down, we've got to stay under this. Let's watch. Right here is your resistance inside the structure. So the buyers are here, the sellers are here. You can isolate this, and now you've got a sandbox, if you will. We need to stay under this and not come out the top. We come out the top, then this trade is going to fail. If we can get below here and break under here, which is what we need to do here, then we can go down. Otherwise, no good. So this is not succeeding. This is the level right here that it had to stay under.
Absorption buyer, volume 124.
One moment. So there's nothing going on there by the looks of it. Looking at some other charts here just so I can see what's going on. One moment, guys. If you have questions, post them. I'm not able to see your questions at the moment, but I will get back to it as soon as I can. Okay, there's no short here. So this was the last structured trade would be here. So this, if you took a short here, which is the entry. So you have two potential entries here. So this sets up a trigger. This is a short trigger. This is resistance. Your stop would be here. If you took this trade, you'd take a stop. That's the real world. And, there's no clairvoyance here. But what we knew was, here's what we know. This is the location. This is an outside edge of a distribution. We got our target down here at 33. We know that. And we also know if we come up here, this is a structured trade to come here and then to continue down and possibly check lower. One of these consolidations, just rotate. So the idea of this trade was rotation. So it did not do that. This trade failed. If you took this trade, you take a stop. That's it. Can't apologize for it because this is trade. This is a trade. This is actually a good probability trade. This one. And if you come to Trader Lab, you'll be able to find out about it. It's called the IB continuation trade. So now, since we got under the 33, now the following can happen here. We are under yesterday's low. We got to see how we react at mid and VWAP. Now, for me, I'd be in park, and I would have taken that trade, and I would take a stop. And I'm perfectly okay with it, other than how I feel about it. The casinos pay to gamblers, and they're not attached to the outcome. It's not a personal thing to them like it is for us. That's what makes it very hard for us to actually put risk on, because we're always in uncertainty, and we're always triggered emotionally not to take the risk to find out. It's like, is the saber-tooth tiger behind the tree? Well, let's go the other way. I heard a little rustling in the brush. Well, maybe it's just a cricket, or is it a saber-tooth tiger? We're not going to go to find out. That's our wiring. So it's why the species has survived. So when you're trying to do things with your conscious mind, the reptilian brain, or that more base instinctual guidance that we have, is much stronger, and it will overwhelm whatever your intention is. So one of the ways to get control over that and have a better way to potentially control it is statistics, because now emotions are intangible. Statistics you can touch. You can touch a statistic. You can then mentally go, well, look, it says it has X% positive expectancy. I've got to take it when it shows up, even though the outcome of the next trade is random. That is trading. And the casinos work the same way. The outcome of the next hand is random. And they do pay to gamblers and give them cocktails and tickets to the buffet, and are building larger casinos. So that process works. But what we do is not based on one trade. Let's go back to the low, because this trade here did not succeed. But let's go back to the low. Let's talk about the trade management for the short. Too high, break low. Here's microstructure. It's right here. I'm going to just take you sequentially through this. Too high, too high, too high, too high. I'm going to draw a bunch of little lines here so you can see structure. Break low, too high, break high. This is too high. Microstructure. Break low, too high, lower. Let's keep going. So this is too high. Notice the high volume node. I'm going to put a little line, and I'm going to show you where it is. It's right there. So as we're sequentially moving down, these are auctions, and they are failing. I'm going to put a little box around here so you could see it. See where it is? And that's this low volume, low volume. So that high volume is the retail price. That's the store. Break away. Sellers take control. Check the price. I'm not paying that. They're leaving the store. They go elsewhere. Okay. Now what do I have? I have high volume here. Another high volume node. Let me come back to it so you can see it. It's right there. I'm putting a little line. My consolidation is here. Now it's going to be a lot of lines on here, but I'm going to just put one more of these in here so you can kind of see it. So, and actually it should be just a little higher. So there, the buyers are here. break low, too high. There's the retail price. So retail price, too high, break low, retail price. So this is like support and resistance. So if I'm trailing down here, this is my trail. Now let's look at Bookmap. So I'm reading the passive side, think Pac-Man. When I get my buyers, my delta, which is stops, I'm seeing iceberg selling, limit orders, and I'm seeing the aggressors. So selling, breakdown. Now, here is something to note. As we're coming down, looks like it's going to zero, which it always does, right? When it's going your way. But I have something going on here. This is the absorption detector, and this is the sweep detector. I'm seeing sweeps, and I'm seeing absorption, but now I see buying absorption, selling absorption. So I got my buyers and sellers, but I haven't seen much of this. I saw it here, buyers, and now I'm breaking down. Now, fine, I'm under my 33. So for me, I trail, and I don't get all of it, never have. Put it this way, I have, but it's so far and in between. It's always like, how did that happen? Now, as we're going down, and I can't pick the low of anything, but let's look here. So I think of resistance, so my resistance is this, this. So right here, I see a seller, they got absorbed, Pac-Man. I see the buyers and the seller, Pac-Man. So, and my last absorption was up here. So this is really my resistance. This is potential support, but I don't cover here. What I do is I look at it. If we come back and test it, I want to see us go through it. If I come back here, let me show you the structure. Same thing from the other side. Sellers are here, buyers are here. Break high, potential trigger, test. This is warning Will Robinson moment. Resistance is here, support is here. Let's just see what happens. And I come through. Once I come through here, the short's over. Then I'm looking at my next trade, and you guys already know what that is. And that's the IB. So the last opportunity for me was this short here. And now, nothing. Trade's done, nothing to do. Park. So it'd still be a quite nice day. So this is kind of how you might consider operating. Now, here's the other thing about this. Each trader finds their own groove or psychological alignment. If you can understand, excuse me, how the market works and then start slicing it up, you can potentially, now there's the mid, and you can start operating inside this. For example, if you had a trade at the mid, now for me, not so much, but let's just say you did, it might come here because this was resistance. Resistance becomes support, right? I don't mechanically sell the mid. I think that's what retail traders do. It's not in this condition. There's nothing saying we're not going to come back into yesterday's range. I mean, I don't know. If you sold this, this is where you'd be looking to go. It's not my trade. This is not my trade. I don't trade that. Me. Now, other traders are going to go, sell the mid, and they may get paid for that. I don't know. But what have we done? We've come back into the initial balance. That means unless we build volume someplace else, we can come back here. So we can come here, here, and here. So I have no trade. And remember, in the intermediate time frame, this is the retail price. We can come all the way back here and hang out because we have the election. Let me take you back to the higher time frame again, just so you can see why. Remember, this was the target, 33, and if you followed the stream and you were here from the beginning, This was laid out 7 a.m. Saturday morning to do the following. Actually, for Friday's trade, it was down and then squeeze. So I had no short and then the squeeze. What do we do today? Open, down, and then the squeeze. Come back to there, which was the target for the upside, and then the short to take this out, which is what we did. After that, put your helmet on, and then you determine. So the higher structure, so what I do, and I always think Russian dolls, I operate inside this higher structure, and then I can get down into time frames, if you will, inside of the bigger time frame. But I don't want to lose sight of the overall structure and context. This is the hardest part for traders to understand, that we're trading something called context. And for example, this is why I won't take a short here. And there's another reason. Think like a retail trader. Don't act like one. So I don't mess with that, because this to me is what retail traders do. And what's the outcome for most retail traders? Not so good. So don't do what they do. I mean, early on in my career, I kind of learned, the mid is a great, location. So if it would come to the mid, I would either, if we're coming from below, I'd sell it. If we're coming from above, I would buy it. And that didn't work out so well, though sometimes it did, right? So, and I didn't understand that the term context, I'd never heard of it. Context is what qualifies certain trades. There are times when the mid is an appropriate trade. It's when we're directional. When we're rotational, it doesn't exist. I mean, it exists, but it's not a trade location. Just like the VWAP is not a trade location for me. It may be for somebody else. It's not for me. It doesn't mean you can't sell the VWAP and get a rotation. Absolutely not an issue. But for me, in this condition, and these aren't recommendations because I'm as wrong as the next person, there's no magic bullet. What there is trade plan, metrics. So for me, what I found is, and I'm only going to again talk about me, if I take stops, which we all do, and my stops tend to be 2 to 3 points, that's about my thing, unless, I just happen to get very lucky with it. I'm around 2 points, 2.5 per contract. Okay. So, and that's okay for me. I'm not trading to make 4 points. I'm trading to get 10, 15, 20 points. I mean, based on the potential of the rotations. It's not up to me. It's up to the participants. So when I look at the market, I think about where's the potential energy or fuel? Where's the stops? Well, today, under that 33, which was the low, this was our target, and then wherever, because the wherever is, who knows, part of the joy. So that's why, for me, it was only shorts. So short in the morning, which you guys saw, get taken out of the short, try another short, which I showed you, the IB continuation trade, because the trend was down. Who knows? You take it out, now nothing, because now we're in two-sided trade. Now I can change to a different trade plan for this, and I can operate in a different, let's just say different plan for rotational trading, but I don't have the same range or edge. What happened to me was early on, you kind of treat everything kind of mechanically and the same. Is this condition the same as the one that took us down to take out the 33, or has the condition changed? Well, if I get into a rotational, I don't want to call it scalpy, but short-term rotations, my risk stays constant. What I have found is I can get, well, gee, I'm sitting here and I'm bored, and I see, oh, look at this, I could have got that. Oh, maybe I should have bought this. No, maybe I should have sold that. Oh, what are you doing now? Now you're taking a great morning, stops and all, which we all take, and it's still a terrific day, and turning it into garbage, because now I'm just playing a video game. I'm not being a serious business person who runs a business of gaming and only takes the risk or plays the games that have a statistical edge that favor me. So if I'm playing a game that doesn't favor me, what's going to happen over a large sample size? I'm going to lose. I don't do it. And I'll tell you why I don't do it, because I have done it, and yeah, that doesn't pay. It takes a good day, and then it triggers all kinds of bad stuff. FOMO, and I call it Hyde, Jekyll and Hyde. Oh, I got to make it back. I was up $2,500 today. Now I'm up 1,800. I can get it back. Have you ever gone through that? Do you know what creates it? Not having a trade plan. And when you have no plan for the specific condition we're in, then what's in control? Your emotional state, because you don't have a plan. You're just making it up and you're playing a video game. And now you're being triggered by your emotions. Oh, this looks like it's going to go down, right? Maybe it will. Maybe it won't. Am I trading with a plan here, thinking it's going to go down? And here's the thing, it will go down. So next time I see this without an edge, I'll take it and get stopped out. I'm making a little point here because if that's what you're doing, that does not create longevity. That just creates you're a visitor, unfortunately. And if that's not your experience, come to Trader Lab and let us know how you do it. Because everyone in Trader Lab has walked in your shoes just like I've walked in your shoes. I just started in 1980, so I've worn out more shoes. If you can't measure it with anchored inputs, and I did a primer webinar on this, then unfortunately you're just gambling. Is this a short? For me, it's not. Even though I can come here. Let's see what it does. But I don't have a trade here. So for me, there's no trade. Now, if somebody was trading short rotations, here's the thing about this. You see this here, break high, break low. You could have taken a short here with a similar structure because it's the mid. You'd be stopped out. Now you have the same structure here, break low and test. Is that the short or is that the short? You see? Now this I get because this is a structured trade. That's a short. That is a short. And it failed. So what is this? Is this a short? Think about it. Is that a short? Oh, it's the mid. Is that a short? If you're in the Trader Lab and you have a vetted trade plan, you would not be taking this short. And I'm not saying that traders in Trader Lab won't take the short. I'm saying is if you had a vetted trade plan, you would not take the short, no matter what it does. Is that making sense? And how about Trader Lab? Are you guys taking a short or are you guys not taking a short? The order of priority of inputs for the IBF context. For the IBF, we have to be directional. We have to have had range extension. We have to have, we broke out of yesterday's low. The IBF is a well-qualified trade for me to take this trade. The only thing about it, I'm trying to think if there's any reason not to take it. No, I don't have any reason not to take this trade. This, for me, is a qualified trade based on my plan. This is the random distribution of outcomes with a edge because there's no 100%. The rest of this, once I'm back through here, I'm back into balance. I have no short here at the mid. I wouldn't go near it. And it doesn't mean that the mid is the trade of the century, but it's not. We have VWAP possibly, and then back here. So for me, I have no longs, I have no shorts, and I'm anticipating this. And it doesn't ever have to get there. We can get the VWAP and, go down from there. So anyway, I hope that answers your question. Hi, D. Yes. Um, if you search back, I'm getting a question about how to set up Bookmap like mine. I think it was last week. Um, I had a question about my settings of Bookmap, and if you can scroll back, um, it might have been Tuesday or Wednesday last week. Somebody had asked me to post them, and I did. But you'd have to, I don't remember who it was. If that person's listening, you can remember what that day was. I had posted screenshots of my setting. I'm minimalist. There's tremendous amount of tools in Bookmap. Um, you know, depending on what the individual wants or finds. I'm a minimalist. The 5748 is not material to me. The current auction supersedes. Once this was my material LVN up here, micro composite LVN, the 7273, which is near the high of the day. That was material, too high. This is retail in the intermediate time frame. Also, we took out this, and now we're back inside. That sets up a return here. The MCLVN, we've already gone through it, not material to me. Current behavior. So this was not tested. So in the RTH, we came up. It's material. This was material coming down the other direction. That was our target on Thursday. From last Thursday, we got under it because the trend, in my opinion, is down-ish. Now we took care of it, and now we're coming back in. Market goes up to go down. Market goes down to go up. If I come back in the range, this is where I'm looking. And it doesn't, so I don't have a trade because the market, of course, can do anything. And it could go down. It could take this low out later. I suspect not, but suspect is as deep as it gets. So my answer to you is here. Edgar, I hope that answers your question. Does that make sense? And Krista, hopefully somebody will respond to Krista with where those PDFs, and I should say, maybe we ought to grab those actually and put them in the library. Those of you, by the way, who are visiting in YouTube, let me just see here. I'm just reading the Bookmap Discord Trader Lab chat, as you can see. Krista, I will get those for you later, okay? Hang out in the Trader Lab. I'll try to get those for you, or someone else maybe will have them. Yeah, you're welcome. I kind of lost my train of thought. Derailed. In the Trader Lab, and this is available to everyone if you're visiting in YouTube, there's a library of webinars. Start with the primer webinar. There's also a sequence of libraries on, I did a deep dive, and it's titled Deep Dive, a volume profile deep dive, See the Magic. And it really is magical in many ways. And there's also pre-market planning. The pre-market planning is what I talked about on Saturday, anticipating today. Yeah, there's one. Thank you, Edgar. Is that the Edgar? Is that the one? There was a whole bunch of them, Edgar. Did you find the rest of them? Thanks for posting that. So remember, this and this. So this is where we're looking for the market to come. If you scroll up a little bit, there's more right up in the same place. They're probably from last week. How are we doing in YouTube, guys? Do you have questions? Let me take a look. Hope you're getting something out of this. Please hit the like button. Well, okay, Edo, I will do that. Ding Cheng, if you don't have a trade plan, it doesn't mean that you don't trade. It means you're gambling. So it's up to you. What if you're going to build a business? Think about if you build a business, do you just open the door and not know what it costs you to produce a product, or even know what your overhead is or cost of production? You wouldn't do it, would you? Would you open a business, any business, without knowing that? That's what this is. This is a business. So before you put a trade on, in my opinion, this is what the Trader Lab is built on. It's about knowing where your trade shows up and does it have a statistical edge. Remember, gaming. So if you have no trades, your job is not to trade. Your job is to come to Trader Lab if you want. There's these 60 PDFs of these structured trades that I've shared, where traders can basically look at these trades and pick one and say, okay, I'm going to become expert at this thing. How do I do that? What is the trade? And then you leverage the community in the Trader Lab, and then you build it out. You build out a trade. And the whole idea of Trader Lab is to create a template of, in other words, if you're a manufacturer of widgets, how do you create a widget? Well, you create one widget so you understand the process. Then you add more product in your manufacturing process. The casinos play many different games, but each game is unique and it follows an anchored set of rules that they don't deviate from. And they just play the games because they know in their business, the only way they get the dollars to come to their side of the table is by using a structured game that is played exactly the same way, exactly. And that's the only way they get to extract the dollars from the gambler. So if on the last hand, a gambler walks out with a suitcase with 100,000 in cash, they don't change the game because the gambler won. The gamblers do win, but it's overhead for them. They just played the next hand exactly the same way. But us, because we're human and emotionally driven, so we cannot do that, and we have a real hard time with that, is we changed the next hand. We, instead of playing blackjack with 7 cards, for us, I don't want to lose. Let's make it 5 cards. Let's, whatever. So it all changes for us, but they don't. We need to emulate a successful business process, which is gaming. Then the games. We identify the games. We play the games when they show up and they're qualified. The mid is not qualified here. That would be a stop. If you have a trade plan and you're in Trader Lab, you'd know that. If you took the IBF, that's qualified, and you would take a stop. You would know that. Not that you would take the stop, but that it's a trade you're supposed to take here. And you take a stop. And statistically, you still have an edge with that trade because all trades take stops. I hope that answers your question. So would you not trade? Your job's not to gamble. Go to the casino, get the cocktails and the ticket to the buffet. If you want to create a business and have an opportunity to create a career path, that's what we do in Trader Lab. So it's, each individual decides what they want to do. Most traders who come to Trader Lab have already walked, we've all done the similar thing because we come to trading with a belief it's the right thing to do. So we see a rotation and we use maybe an oscillator or something crossing over and says, oh, get short. Well, where do you get short? Would you get short there? Would you get short there? Me, I get short there. Would you get short there? Not me. Stop out. Would you get short here at the VWAP? Maybe that's it. Maybe it'll come here. Maybe it'll come here. Maybe it'll go and take out the low of the day. I don't have a trade here. I don't have a trade. And I'm only saying that because the thing that's most important, it is not only the location of the trade, it's the condition of the market, and that's called context. Context is difficult because we kind of get mechanical. But with the trade plan, you would know this trade is qualified, this is not, this is not. and this is where we're potentially going or not. And again, I can't predict anything. So casinos can't predict, I can't predict, so I don't try. Does that make sense? I have 5 minutes left. If you have any questions, now would be a good time, as they say. Thanks for posting that. This is my Bookmap setup. If you're interested, this is my settings. And by the way, if somebody, Ned, if you're around, if you could post these in the library, there's, I think, maybe 3 of them or so. That would be useful. Yeah, I know, Nani. He's, Ned is, shall we say, far away. Questions? Ding, no, you don't reverse engineer the PDFs. It's a lot more, there's more to it. You need to come to Trader Lab. You need a community to support you so you can ask questions. Trader Lab's a serious community. It's not romper room. It's professional. Senior trader has over 50 years experience. I've got 45. I'm an active participant in there when I'm, and I also trade full time. So, between trading and I'm okay to post in there when I have a trade on, but I do not do anything else when I'm stalking a trade. But I already know where my trades are. So for me, I'm sitting here. I don't have anything to do, because I don't have a trade here. I'm not here to keep busy. I'm not an hourly worker. I'm just here to take advantage of opportunity with outsized opportunity within a risk parameter I've defined based on my ability and skill. My skill, I can get around 2.5 to 3 points as risk. Even if I just trade a 2 lot, which I don't, but let's just say it was a 2 lot. The goal would be to get risk neutral with the first contract. And I need to know statistically what my probability is of getting risk neutral, which means the worst that happens is I scratch my trade. And then if I have a positive expectancy with a certain structured trade like this thing, to get risk neutral before getting taken out, I put the trade on and I either take a full stop or I get my scale, scratch, or then go to my target and manage the trade. That's basically it. There's nothing more complicated than that. That's as complicated as trading is. The thing about trading is to understand where your trade shows up. And this, see, the thing for most retail traders, they're mechanical because they don't understand the condition of the market and how it changes. This is the very difficult aspect of this. And that is, we're going here, maybe. Now, I can't predict. This is not predictive. What this is behavioral. When the market got above this level and this outside area, so I knew when we came up here, things were rather tenuous. But that doesn't mean I don't take the trade because there's no precision. Once I got above here, the trade failed, and I don't want to be short because now the shorts in this leg, they're all on the they're all getting squeezed. So if they're getting squeezed, this sets up something called mean reversion, which puts me back to here. And that might be it. Then we might just slosh around because we got the U.S. election. Does that make sense? If I didn't have Bookmap, well, I got to tell you, I wouldn't trade without Bookmap. And but if I didn't have it, I would have to have a lot more risk, and I would not have the insight. I wouldn't be able to see this. And I'd have to up my time frame and risk. In other words, price action structure. But I wouldn't be able to see right here what's, any of this, the stops, the icebergs, that there's a seller here. I would only see a line. I know a VWAP is here, and I know I got a seller here. I have a microstructure here that suggests potential rotation, maybe to here, or who knows, right? But I don't have a trade here. But I know this is retail traders will sell this. It's mechanical, but without Bookmap, I definitely am kind of like it reduces my ability to do something other than other retail traders do. When I can see this, I can be very micro and I could like sell this with a stop here. If I'm using price action structure, I might have to wait a lot longer, so I have a lot larger risk. So for me, Bookmap helps me have more confidence because I can read the order flow and better manage my risk. By the way, coming back and checking yesterday's range is not unreasonable, and getting a reaction here is not unreasonable. In the auction, this is potentially where we're going to go, not a trade recommendation, and it is all random. Please give a thumb up in YouTube and a like if you're visiting. Hope you got something from this today. I'm going to make this stream, I think we'll make it available to the public. There's a full library of webinars that are available to everyone in the Bookmap Discord Trader Lab community. There's no cost. You can use the link in the bottom of YouTube if you'd like to visit and even participate in the Trader Lab community. It's a serious community. There's also a lot of additional education in the Bookmap server: stocks, options, crypto, order flow with a high tier tool like Bookmap, options, market maker behavior, algorithmic behavior, swing trading, how to use the market by order data, stops, icebergs. How do you use all these tools? And remember, we don't have a short. Retail traders, what do? Sell the VWAP. What do we do in Trader Lab? We think like a retail trader. We don't want to act like one. Thanks for visiting Trader Lab. Don't forget to give the like on the way out in YouTube. Look forward to meeting you in Trader Lab if you haven't been. It's a terrific community. There's the 60 PDFs you can download of structured trades. I'm not a vendor. There's no cost for this. It is a community effort. We all work together to leverage our experience so we can all do better. Thanks again, guys. Look forward to seeing you soon. Look forward to seeing you in the Trader Lab.